If you want to profitably grow and scale your e-commerce business, you need to understand your contribution margin. So in this video, we're going to go through an article that we wrote talking about what contribution margin is, why it's important, how to measure it, and then how to use it to actually grow and scale your business. So what is contribution margin? Contribution margin is simply your revenue minus all the variable costs associated with making and fulfilling a sale. So it's basically how much money you got left over that can contribute to fixed costs. So once you pay for the product, once you pay for all the variable costs for it, you pay for ads, all those type of things, then you've got that money left over that you can then contribute to things like wages and rent and all that sort of stuff. So the biggest difference between it and gross profit is that gross profit will measure your cost of goods sold and your sales taxes out of your revenue, but it won't account for all the other variable costs that go into making a sale, especially for an e-commerce brand. So, for example, with this sale here, we've sold a product for $110, you've bought it for $30, and you had $10 sales tax, you got $70 left over in gross profit, but you had to go through and make ads for that sale. You then had to pay the payment processor. You then had to pay the shipping if, for example, you did free shipping on this product. So you had all the other expenses, meaning that you only have $33.06 to actually pay for costs like rent, wages, all those other fixed costs that go along with running a business. So if you use gross profit on this, you could potentially be thinking you're making lots of money, but not have enough money left over to then pay for those other fixed costs in a business. This is why it's especially important for e-commerce brands, because they have so many other variable expenses that go along with making a sale. Most of them think they're making lots of money because they're looking at their gross profit numbers, but not realizing they're actually losing money on every sale because they've stacked multiple campaigns on top of one another. They might have free shipping, plus like some discount, plus offering something on there, like a free gift, and then plus offering like loyalty points. They've added all these different things up and they think they're making money, but they're really not. So this is why it's so important, because if you don't measure this, you can't manage it. And it's really not about how much money you make, it's how much money you actually get to keep that matters for your business. So once you understand this, how do you actually measure your contribution margin? So like I said, all it is your revenue minus your variable expenses. So what are the variable expenses? In e-commerce, these are the most common ones. You've got your cost of goods sold, so how much it costs to actually buy a product. You've got your sales taxes. You've got your ad spend, so how much it actually costs to actually get that person to make that purchase. You've got your payment processing fees. This is things like Shopify, PayPal, Afterpay, those type of stuff. You then got shipping and handling, so if you're using a 3PL, it'll be that. It'll be the costs associated with Australia Post or posting your products overseas, and the same with like fulfilling and actually delivering that product. So if you have to pack it, you have to pay for those costs as well. Then you got your packing material, so boxes, labels, all that sort of stuff. You got affiliate commissions, so if you're getting an influencer sent you a thing, you've got to then pay them a commission. That comes out of this as well. It also includes gift and loyalty points. If you're putting in $2 worth of lollies in every order, that might be great, but you've still got to account for it when you're actually running and doing your profitability for that campaign. And it goes same with loyalty points. If 5% of that sale is going towards loyalty points that they can then use as a gift card for next sale, you need to account for that, because if you're giving that 5% away, if you're not accounting for it, you could be losing money on those loyalty points overall. And the same with app transactions. If you're on Shopify, some of the apps actually will take a transaction fee on every sale you do, or their cost will scale with how much you use them. So you need to account for this, again, as a variable cost in your expenses when you're running a business. So, like I said, it's really not that hard to calculate. You just got to get these numbers. There are like a few different things, but everything should be available for you to find. And all you have to do is bring all that together, minus your revenue, and then you've got your contribution margin. So a couple of ways that we can do this is a simple contribution margin sheet. So you've got here, you can download this template where you just put your total sales in, and then you minus your cost of goods sold, your sales taxes, your fees, shipping, app expense, ad spends, and promotions. And you put that all in here, and it'll give you a contribution margin amount here. And then you can put your baseline. So what we call baseline is actually basically like last year's contribution margin for that corresponding month. And then you can see how much your contribution margin is growing overall. Because your sales might be growing, but if you're running more discounts and more promotions and things like that, or just spending more on ads, you might be finding that you're actually not making more money at the end of the day. The other way you can do this is with a custom P&L report. So you can get your accountant or bookkeeper to put together a P&L report for you that moves some of these variable costs here up into your cost of goods sold. So you are going to get pushback with some accountants on this. But the big note I want to make here is that this is a management report, not a tax report. Some of your accountants, or a lot of accountants, will look at this and go, hey, they're not actual cost of goods sold. It's true. For tax purposes, they're not. We're not worried about taxes right now. What we're worried about is how much money we're actually making that we've got to spend on the business. How much money can I spend on wages? How much money can I spend on that new campaign that I want to run? All those things are what we care about, not how much money you got to pay for taxes for this. So it's just something that some accountants will push back in that I wanted to make a note of. And the other way you can do it is getting some reporting software. So you've got like Databox, Fathom, they potentially can put together automatic reports for you, where you can take your like Xero or QuickBooks files, you can grab it, and then you can pull them out and actually create custom reports in there as well. So there are a couple of ways you can actually sort of measure it and manage it for your business. All right, so now you know how to actually measure your contribution margin. How do you actually use it to actually grow and scale your business? This really comes down to two things. The first one is just knowing whether your campaign is profitable or not and whether you should reinvest into it. The amount of times that a new client's come on board with us and we've gone to look at their campaigns and like, look how profitable they are, and we've actually dug down and they've actually been losing money on every sale is crazy. So this is something you really need to know, whether you actually should be reinvesting in a campaign or whether an actual campaign is actually profitable for your specific business. The other thing you can do is you can do scenario planning. So once you understand all your variable costs and the variable things associated with that, you can then scenario plan your marketing campaigns to see how different variables will interact with each other to see the profitability out there. To make this easier, what we've done is we've actually created a calculator to help you with this. So this will be linked in the description below, but the way it works is that the first thing you do is chuck in your actually average order value for this campaign. So let's say we're going to run a campaign and we expect our average order value to be around like $150. We then chuck in our sales taxes, so GST or whatever your sales taxes are. Then you chuck in your cost of goods sold, so what it's going to cost you on the product side to have this average order value. Then you've got your ad spend, like what's your return on ad spend. So let's say we expect a 3 times return on ad spend. We then got out-of-pocket shipping costs. So, for example, if your actual shipping is going to be $20 and you have flat rate $10 shipping, then obviously you're going to have $10 out-of-pocket costs. So that goes here. If you're going completely free shipping, this would be $20. And then you add in any value adds. So this could be like free gifts. So let's say we've got a $3 bag of lollies. We chuck that in here. Or the cost of like loyalty points or any of those other value adds you can add into the thing, they go here. And then you've got your transaction fees. So let's say you're on Shopify's lowest level, it'll be somewhere around like 2.7% to pay for the credit card fees, merchant fees, things like that. And then what we do is we come over to scenario planning. So you can see here, the current campaign is making $9.31 for every sale, which is a 6.2% profit margin. We want to come in here and then we can do some scenario planning. So let's say that we decide we're going to reinvest and we're going to do new ad creatives. We're going to up our ad creative, which is going to increase our return on ad spend from 3 to 4. You can see that impact that it's going to have on profitability, for example. But we could also do the other way around. You could say, hey, I'm going to increase my prices to $200. So we're going to go from $150 to $200, but it's going to decrease my ad spend, my return on ad spend from 3 to 2.5. And again, you can see the impact this is going to have on your actual campaign. So what you can do is you can actually then play with these different variables and think about how each one interacts with each other. So again, you could say, hey, we're going to get rid of flat rate shipping and we're going to just let the customer pay for us. We're going to have no shipping handling costs, but this is going to bring me down to say 2% or 2 times return on ad spend, but I'm going to keep my costs really high. Again, you can see the impact this is going to have on the campaign profitability overall, for example. So you can go through, adjust these different variables and see how they interact, and you can really put together a campaign that's going to be profitable. And then what you do is, obviously you don't have a crystal ball, so these are just assumptions. You then test these assumptions with the campaign, and you measure it and say, hey, we increased our price to $200, we dropped our shipping, we made the customer pay for all the shipping, but it isn't 2 times return on ad spend. Our ad spend's dropped down to 1.2. So we're actually losing money, or 1.5, sorry. So now we're actually losing money on every sale that we were making money on because we're just spending too much money on these ads to actually get them. So again, you want to run retest these things, but you can actually have this here as a benchmark to know, hey, if it doesn't hit this level, we are not profitable. And again, you can go back and look at this to the retrospectively for your current campaign to see whether you should be reinvesting in them. Alright, so now you should have a good understanding of what contribution margin is, why it's so critically important to actually properly grow and scale your business, how to actually measure it, and then how to use it to grow and scale your business. If you have any questions about anything in this resource, feel free to reach out to us, or if you want to see if we're a good fit for you working with your business, feel free to book in a consultation. A little bit about us though is our e-commerce growth consultancy that primarily works with Shopify stores, help them properly grow and scale. So if that sounds interesting to you, feel free to book in a consultation, but overall, hope you have value out of this, and I'll see you later. Bye.